Hey everyone, we're here with another video highlighting the top 5 highest yielding Dividend Aristocrat stocks right now. A Dividend Aristocrat is a company that has a history of continuously increasing its dividend over a lengthy period of time. For those who are unfamiliar with the term, to be considered an aristocrat, a firm must have regularly increased its dividends for at least 25 years and a member of the SP 500 index. Being referred to as a dividend aristocrat holds a lot of weight for a firm, since it is not simple to obtain because it takes a minimum of 25 years, as well as having enough cash on hand to keep increasing dividend distributions. Investors often see firms that are members of this select club as being safer, and their price are frequently less volatile than other equities. Furthermore, firms who have accomplished this achievement do not want to lose it because regaining the position takes so long. So for your convenience, I'm going to list the top 5 highest yielding dividend aristocrats in order of dividend yield, from smallest to greatest. But first, if this is your first visit to our Smart Stocks Academy channel, please accept my best greetings. Don't forget to hit the like button and subscribe, and click the notification bell next to it to be the first to know when a new video like this is produced. So if you're ready, let's get to the topic. The Chevron firm is ranked number 5 on our list. Chevron is involved in integrated energy, chemicals, and petroleum activities across the world through its subsidiaries. The business is divided into 2 segments, upstream and downstream, exploration, development, and production of crude oil and natural gas, as well as processing, transportation, and regasification of liquefied natural gas is all part of the upstream segment. The downstream section is responsible for refining crude oil into petroleum products, selling crude oil and refined goods, and transferring crude oil and refined products by pipeline, marine vessel, water equipment, and railway. Chevron Corporation also has operations in cash management and debt financing, insurance, real estate, and technology. Chevron was established in 1879 and is based in San Ramon, California. The company is presently priced at $134.20 per share, with a 4.23% dividend yield. Chevron has been increasing its dividend for 33 years, making it a dividend aristocrat. They are one of the few oil and gas firms that didn't have to slash dividends during the financial crisis of 2008, making them a standout in the energy industry. With so many countries aiming for alternative energy sources like wind and solar power, it is no surprise that the oil and gas sectors have been fiercely attacked in recent decades. Despite all the difficulties, there are still some positive developments in this industry that makes firms like Chevron worth considering. Despite what some investors may believe, Chevron's products are in high demand across the world. What's more, Chevron has been pouring hundreds of millions of dollars on renewable energy to support its own operations. Chevron is also noted for having fewer oil spills and catastrophes than rivals BP, Shell, and Total SE. So while determining which dividend stock to include in your portfolio, don't rule out businesses like Chevron. Chevron pays a quarterly dividend of $1.34 per share, with the most recent declaration date of November 17, 2021. Furthermore, this stock is up by 33.80% in the last 6 months and nearly 50% in the last year. So in terms of the stock's performance, it's been able to rebound rather effectively from the pandemic. AbbVie Incorporated is ranked 4th. AbbVie is a pharmaceutical company that develops, manufactures, and distributes drugs all over the globe, including Humira, which is used to treat arthritis and plaque psoriasis. They also develop medicines for infections, Parkinson's disease, hypertension, and persistent constipation, among other conditions. AbbVie was created in 2012 and is based in North Chicago. Because AbbVie is a spin-off of Abbott Laboratories, which is also a dividend aristocrat, they are called a dividend aristocrat. So according to what I've seen, AbbVie is always seen as an aristocracy. AbbVie is presently trading at $140.73 a share, with a 4.01% dividend yield. Since 2012, they've regularly increased their dividends, which is now at $1.30 per share. Their stock also did very well during the pandemic in March of 2020, recovering in less than 2 months and continuing to do so to this day. Most dividend stock investors choose consumer staple businesses such as Johnson & Johnson or Procter & Gamble, but ABBV should not be disregarded when it comes to generating strong returns and growth. ABBV is a corporation that invests heavily in research and development, which is unsurprising given that the biomedical companies are always developing new drugs and treatments for a variety of conditions. ABBV continues to introduce new items, with 32 currently listed on the website at the time of filming. They also use their existing treatments to expand into new treatment areas, allowing them to diversify product line. Their website also claims that their goods are used by over 52 million individuals in over 175 countries each year. And given the present environment, their stock performance has been great. Their stock is up by 29.67% from a year ago, and it is up more than 132.92% from 5 years ago. ABBV's earnings are increasing year after year, and Wall Street analysts are optimistic about the company's future prospects. We now have International Business Machines, sometimes known as IBM, at number 3. IBM is a multinational corporation that manufactures and sells computer hardware, middleware, and software, as well as hosting and consulting services in a variety of fields, from mainframe computers to nanotechnology. IBM is a large research company that has held the record for the most US patents generated by a firm for 28 years in a row. They were established in 1911 and is based on Armonk, New York. Unlike the last two companies on this list, IBM's recent performance hasn't been stellar. It has a dividend yield of 4.76% and is presently trading at $137.78 a share, with the most recent dividend paying out at $1.64 per share. IBM also became a dividend aristocrat a year ago, having grown its dividend every year for the previous 25 years, although its price has been declining since 2013. Despite the fact that their stock is up by 19.20% from a year ago, it is still down 19.27% from 5 years ago. However, ideally, their recent success will continue in the future. IBM is currently focusing on cloud computing, having previously been recognized for their hardware decades ago. They are now attempting to preserve their supremacy in computing by moving full steam ahead and into fresh fields. They are in the midst of a multi-year shift that has been expedited by IBM's acquisition of Red Hat, a software company that delivers open source software to businesses. Despite all that's been going on with IBM, Wall Street hasn't been as enthusiastic about the firm as it has been with the others on the list. According to Yahoo Finance, IBM's revenue hasn't increased since 2018, and the stock is currently rated as a hold rather than buy or strong buy. We'll have to wait and see if IBM's transformation succeeds in generating exceptional profits in the future. Exxon Mobil Corporation is ranked second. XOM is a company that searches for and produces crude oil and natural gas in the United States and across the world. It works in 3 segments: upstream, downstream, and chemical. The firm also manufactures, trades, transports, and sells crude oil, natural gas, petroleum products, and other specialty goods, with approximately 220,000 wells now operating. They are situated in Irving, Texas, and was formed in 1870. XOM stock has been performing exceptionally well this year, with a gain of more than 71% from the same period last year. It is presently priced at $79.68 a share, with a 4.42% dividend yield. Their most recent dividend was 88 cents per share, paid on November 10 of 2021. XOM has comfortably grown its dividends for over 30 years, making it a dividend aristocrat. XOM is one of the world's leading listed energy and chemical companies developing and using next-generation technologies to help fulfill the world's expanding need for energy and chemicals. They sell approximately 5.4 million barrels of petroleum products each day, and have a vast catalog of lubricants for cars, planes, industrial machines, and ships, so they have a well-diversified product portfolio, which is always a good thing. Many oil industry stocks have been performing well recently, and I believe the reason for this is due to the increased gasoline expenses we are seeing. Just with Chevron, there is a lot of demand for the goods that XOM offers, and it appears that these firms are here to stay, so I wouldn't dismiss this sector just yet. especially if you're looking for some big dividend payouts. Finally, AT&T is ranked first. AT&T is a global telecommunications, media, and technology company. The corporation is divided into three segments: communications, Warner Media, and Latin America. AT&T provides cellular phone and data communication services, as well as video and targeted advertising and broadband services. AT&T is based in Dallas, Texas, and was founded in 1983. AT&T stock has been performing poorly recently, with a drop of around 15% from a year ago and a drop of 40.65% from 5 years ago. Despite this, AT&T has raised its dividends for 36 years in a row, with the most recent payout of 52 cents per share being issued on January 7, 2022. AT&T is the world's largest telecommunications firm and the 9th largest company in the United States. They are also one of the leading mobile phone service providers and the largest fixed phone service provider in the United States. The corporation made about $180 billion in revenue in 2019. AT&T has recently concentrated on increasing 5G coverage to consumers and small companies, as well as developing its HBO Max streaming service, which has experienced tremendous growth in recent months. According to AT&T's 2021 Analyst and Investor Day presentation, the firm plans to extend HBO Max into 60 new territories by the end of the year, as well as create an ad-supported subscription that will help business make more income. By 2025, they expect to have 120 million HBO Max subscribers. Despite AT&T's success, many investors remain cautious, according to the stock's previous performance. However, AT&T CEO John Stankey recently appeared on CNBC and provided investors with some encouraging news. According to Stankey, the firm has no plans to lower its dividend in the near future, and they may be even able to keep paying at the present rate, which is a great thing. Given what the CEO mentioned on CNBC and the stock's lengthy history of rising dividends, I believe it is worth keeping an eye on in the future. And with that, today's video comes to an end. If you haven't already, hit the like button to show your love and support for the video. Also, don't forget to subscribe to the channel, turn on the notification bell next to it to be the first to know when a new video is posted. Thank you for stopping by to watch, and we hope you had a great time. We hope to see you again soon.